Hey guys, Sheetal here. Sheetal's Musings. I'm going to do a weekend edition here. I'm just going to talk about what I saw this week in the markets and really what scares the hell out of me. This is unlike any market I've ever seen. And I am somebody who really closely stares at the tape, meaning I watch the ticks. I watch it daily, 9:30 to 4 p.m. in the US. I am constantly watching the market go up and down, fluctuate, um, just seeing how things trade, how people, because I believe that's a big driver of investor psychology, how they're perceiving the world. And look, markets are just an aggregate view of confidence in the world. So I am incredibly focused on what stocks are doing, how they're trading, because it helps us kind of confirm um, or challenge the thesis that things are normal. And for the first time in my career, things are less than they're as abnormal as I've ever seen. I mean, we've watched the market, just for people who aren't staring at the tape every day, move anywhere between 3 to 5% over the course of a day. Like, if I told you your salary, like if your salary was, I don't know, $100,000, and I told you every day that salary could change and you could be making 95,000 or 105,000, depending on the day, that would flip you out. That's the world we're living in right now. I'm talking about this daily. You're seeing the markets change and go from up to down, up to down, up, down, and mostly down. So markets are, so this week was a big week in the sense that you had central bankers like the Fed, which is the guys that print money for us and raise interest rates, come out and talk about their view over the next year and how they think about inflation and how they think about economic growth and what they think about Omicron. And one of my friends who watches their press conferences and everything said they look terrified. And I think they're terrified because they don't see a path other than being less accommodative. So being tighter with money, being tougher with interest rates, which they know will be negative for the economy, but they're not sure how to fix that. So what that means is, they're going to go down this arguably destructive path that they know is destructive, which they realize will drag growth, but they have to because they're really worried about inflation. So it's that rock and hard place I've told you about. But what is different is normally markets are interesting. They fluctuate, of course, but even negative markets or markets that go up sometimes, go down sometimes. Maybe they'll keep going down over time. They'll continue to trend a certain way. Like markets sometimes trend up, they sometimes trend down. Here they're trending down. What is incredibly interesting about what I've been watching is there's almost no appetite to buy stocks outside of what happened Friday, which we'll see what the follow is through tomorrow. This market every day would start the morning up and the morning down. And this was in the midst of really good earnings from corporations. So yes, Netflix was bad. We talked about that. But Microsoft was fantastic. ServiceNow, like software companies, did incredibly well. And it didn't matter. And that is therein lies the rub of what we're watching. We are watching a tape where confidence in the market in the future has been completely destroyed. And I don't know if there's a way to fix that in the near term. And as a result, we are now in a situation where the next card that turns over makes it really hard the next card to turn over could be really deadly, right? So the view now is, if you go look around, if you talk to people, strategists and things like that, the market, the governments, federal governments, the central banks will not accommodate until the markets go way lower. Because remember something, COVID was a really bad month in March of 20 in terms of markets, but after that it was fine because the central banks all printed more money to bail us out. They gave us, stipends for sitting at home. They supported. They bought bonds. They supported the economy in the ways that they have normally been accustomed to do so when markets have been bad. This time around, though, markets are bad and they're not willing to do that. And so it's not such what's scary and why I am a little bit worried, or why I'm actually really worried, is because it's not that, it's not that they're not willing to help. It's that they're not willing to help and things are good and the markets are going down. Think about the pendulum of what we're seeing right now. We're seeing a situation where corporate earnings, results from companies, are indicating a very healthy economy. Credit card data is saying that consumers are still spending despite a lull in December. And at the same time, despite those things, these markets go down every day. Because markets, like we've said before, are forward-looking indicators. So what the market is telling you or implying is that they think we are screwed in 12 months. And I know Elon Musk talked about a recession coming at the end of this year. You might be right. And it's certainly less than encouraging, less than ideal that what we're seeing right now is a market telling you that we don't care what the results are right now, because we know in the future we're going to see a lot of calamity and problems. And this isn't just happening in the US, this is happening everywhere. Chinese stocks go down every day as well. And what's crazy about Chinese stocks going down is China is actually accommodating. So while we are sitting there tightening and making things harder in terms of policy for growth, China's doing the exact opposite. China is pumping money into the system, trying to save some of the real estate sector. They are as aggressive as ever to try to accommodate people. So, and yet the markets never go up. And this has been the concern I've had for the last decade. And it was always really hard to calibrate because you just didn't know. But one of the things that I constantly struggled with was you're in a world where the markets have decided that the government has to support them, meaning it has to prop things up with low interest rates and printing money and whatnot to keep the markets going up. What happens when that reverses and changes and they no longer want to do that? And that is the world we're now living in. That is what we are seeing. And there, again, if you think of markets as just a confidence game, like, why is Microsoft a $200 stock or $100 stock? Like, it doesn't, what makes something go worth $50 or $200 or $300? Like, why is Netflix worth $500 versus $200 versus $100? Well, there's two reasons, right? One is Netflix makes a lot of money. Well, Microsoft does anyway. Netflix is supposed to make a lot of money in the future. And the second reason, which is crucial, is that there's a view that Microsoft's going to keep growing their earnings. They're going to keep seeing growth. And as a result, we are willing to pay buy Microsoft stock and pay for that growth. We will spend more, people in the market are buying, someone is buying Microsoft at $300 a share from someone who's selling at $300 shares because he has a view that Microsoft will continue to grow while the person selling it might be selling it to make a profit and whatnot. So there is so much confidence in Microsoft's ability to grow, to show continued strength and earnings and profits and dividends that people want to own it. What's happening right now is people don't have that confidence. And that is the underpinnings of a market. Nobody has any confidence that the future is going to be okay, that we can survive tougher conditions, higher interest rates, inflation, less money being printed. The view is we can't. And if we can't, then where does that leave us? Because at the end of the day, if you remember 2008, the markets went from 1,600 to 600, 666. That was the low in the S&P. Okay, today, the markets are 6 to 7 times higher than the lows. I mean, they could be easily 30 or 40% lower, and they'd still be up a lot, and yet still, we could be living in it tells you where confidence can go. Confidence went to the toilet in 2008. And if confidence went to the toilet, and confidence also went to the toilet in March of 2020. Confidence goes to the toilet now. It's going to be really hard to rebuild that confidence. And I'm going to say this as clearly as I can. I talk about this in my relationship stuff, but look, ultimately, markets are all about credibility. And how much credibility do people have? How much credibility do we have that our leaders, our governments, our central banks understand what's going on and can manage us through the most difficult situations and difficult times? We look to markets, and we look to our leaders, we look to our governments to instill confidence. When that goes away, then the question is like, how do they rebuild it? And now, because of what's happening in the markets, because of what we're seeing, if the markets go down, what is the tool the governments will use to bring it back up? That's the question. Like, can they play the same? Like, can they just decide to cut interest rates again or print more money? Well, we've now seen what happens when they don't. It's a little bit like I think I've mentioned this, the patient on life support. You take them off life support, patient dies. Here, okay, you bring the patient back to life and then you just keep kind of chugging him along as he's struggling. But what does that look like longer term? And what does that mean for us? And I'm not entirely sure. And it's really terrifying. So I think we have to watch what happens over the next few days, the next few weeks, and I certainly will, and share whatever thoughts I have. But I think like this is unlike anything I've ever seen, only because markets should have support. There should be some confidence that, okay, yeah, the market's now down 5 days in a row, it should come back. That's just a logical thing that we would all expect. That's not happening. If anything, markets every day go lower. And maybe this is just a trend that will reverse this week, and I can tell you, well, it's kind of behaving the way I thought it would now. It's becoming more, but I have never seen a situation, even in a way, where markets will just go down every single day, and there is no demand or appetite for certain stocks. That is remarkable. That is new. It is terrifying, and it is incredibly fascinating to watch. And I don't know what it means, but it is actually, we are still in a situation where markets haven't completely like imploded on us. But if you start seeing this continuously, the people that are buying, that are saving the market, that are trying to catch a dead cat bounce or something like that, are just going to give up. No one's going to want to own anything. There will be peak frustration, and that's really dangerous. And we don't want that. So, where does that leave us? That leaves us in a wait-and-see game. Friday was really constructive. We have to see what the future brings, but right now it's really terrifying. So, shifting gears, I want to talk about Tesla. I'm going to try to talk about stocks now, specifically only because we're in earnings season 2, and I think it's important. But look, Tesla's a phenomenal company. It's amazing. It has some of the most incredible attributes you want in a company that you're investing in. You want great leadership, and it has that. You want a huge addressable market, that's electronic vehicles. You want leadership in terms of product and innovation. They are the leader. They have the best cars in electric vehicles. And then finally, you want a business model that you believe can make money. I mean, anybody can have a great idea. Like I could sell you Kit Kat bars for 10 cents and sell $1 million. But I'm not going to make any money because Kit Kat, I have to buy them for $1. So I'd lose 90 cents on a Kit Kat bar. Tesla was like this. In the early days, when Tesla was first being built, they were selling cars at negative profits. They were losing money on the cars that they sold. And this was incredibly distressing if you were an investor. And a lot of people were betting against them, including myself, because we had this view that, look, these guys can never make money at the price points that they're trying to make money on with these cars. So they'll never be able to grow that fast, because when you're losing money, the more you sell, the more you lose. That is incredibly difficult. More importantly, at some point, your competitors will come out and catch up with you and come up with similar, comparable products at better price points because they can make money because they've done it before. So there were two theses on Tesla. One is like there's going to be a lot of competition because everyone's going to do EVs in the automotive industry, and we got 50 or 60 guys going after the sector. And the second is Tesla will never be able to scale. And so let's address the first part of what happened with Tesla, their ability to scale. Like they were trying to scale in the US, and they were trying to scale specifically in places like California. The problem was labor costs were so high, and they're so high in an absolute basis. America has some of the highest labor costs in the world. Auto autos, labor unions in autos are real, even though I think they had less exposure than most. Um, and relatively, Asian competitors have an incredible cost advantage. They just, people make fractions of what they make here for arguably the same product. The same output. So you had two things going against Tesla. One is your absolute costs are really high, just in general, and two is your relative costs are high. And so Elon was, is an incredible visionary, but incredibly frustrated by this and kept seeing this. And so he was trying to figure out, how do I manage against this? And how do I create a better, more profitable business model? And he tried everything. He talked about the Gigafactory. He tried to get concessions in the US and whatnot. But the one thing he could have done that he didn't want to do initially was go to China, where labor costs are incredibly low. And China wanted him there. And the reason it was China and not some of the other markets in Asia is because China had the scale, they had the breadth, they had the resources to get Elon bigger production facilities and hopefully help him build more cars that he could then sell. So Elon couldn't raise the price of a car. He just couldn't. He was already charging $80,000 for his model, for the Model S, and the SUV. I think it's the Model X, and he needed to come up with lower end versions. So he was actually needing to go down in price. He was already losing money at $80,000 price point, and he needed to go down in price. Because most people don't buy $80,000 cars in this world. They buy $30,000 to $40,000 cars. Actually, most people buy $20,000 to $30,000 cars. So he had this huge problem. And the battery costs, which are the biggest costs in an electric vehicle for him, he couldn't get the price down because prices just weren't coming down for that. So his battery costs were fixed, and he was struggling with, how do I create a more compelling operating model? How do I make more money? I have to pay people less. I can't pay people less in the US. No, there's laws against that. But if I shift my manufacturing, I'll shift it. So what was his big deal? Why didn't he want to go to China? There's a lot of theories about this, but my fundamental reason he'd want to go to China is China has been guilty of stealing secrets and technologies from US and European technology companies for the last 30 years. You take something in China, they will steal the source code, they will ultimately use it for their own devices, and then they will create more compelling price point products in that industry and compete with you. This is why Microsoft doesn't operate in China. This is why Google exited China. They did not want to give up the source code. China almost demands it to operate in their country. They need to understand the blueprints for what you do. And ultimately, they usually give that to their homegrown competitors who then come after you. And Elon didn't want to do that. He had tremendous IP, intellectual property, with what he'd built with Tesla. And he had no interest in giving that away to somebody. And then watching his company potentially have to deal with a competitor that was based on his technology 10 years later. But what was happening was, by 2019, Elon was losing a lot of credibility with US-based investors. And this goes back to the confidence game I talked about with markets. That exists with stocks just as much. If your investors lose faith in you, they don't believe you can execute, your stock goes down. Elon was now in year 9 or 10 of Tesla. And he was yet to really turn profits, and he was still struggling because he couldn't figure out how to change his labor cost structure without going to India. And so what did Elon do? Eventually he caved. He gave in. He built gigafactories in China. He moved his production facilities there. And ever since then, Tesla has enjoyed this incredible renaissance. It is gaining market share. It's able to sell millions of cars versus it's only being able to sell hundreds of thousands of cars. And the business has completely been streamlined. Now, Elon probably knows that he has one goal now. He has to get to incredible amounts of market share in the EV market near term. Because if he doesn't, the Chinese are coming with their own homegrown solutions, which are likely going to be based on some subset of his IP, his intellectual property that he ended up having to give them probably to build in China. But if he can get to enough market share, get big enough, then he can survive and thrive. And that's what's really fascinating about what's happening. Because people didn't understand the iPhone and what it could do for Apple when it came out in 2000, It was 2008. 2008, I think. 2007, sorry. 2007, and then that was your first iPhone. People did not appreciate what could happen in these markets because historically, the smartphone market was 7 or 8 players. The phone market was 7 or 8 players, and there was Nokia, there was Ericsson, there was LG, there was Samsung, Motorola. There's so many players. Well, today, there are only 2 players, Apple and Samsung for the most part. And what's crazy about that outcome is they own 50% of probably the most important utility to people in their world, which is their phones. Cars are probably as important a utility as anything else. And if you told me, and to date, we have yet to see a situation where anyone in the auto industry has really come up with an EV that is comparable to the Tesla products. And that's incredibly scary because we all know cars are big ticket purchase items. And for one company to, and EVs are the future. So all cars are going to be electronic, are going to be EV cars in the future. Whether it's 5 years, 10 years, or 20 years, I couldn't tell you. But that's going to happen. One car company could own 50, 60, 70% of that market right now because their products are the best. They have a lead among all their competitors, and they're going to continue to innovate. So that's really and that's the bull case on Tesla. So people look at Tesla and they think about Tesla and they go, "Wow, this company is just too expensive. I can't believe it exists like this." People are missing the point. This company could end up being a behemoth unlike anything we've ever seen in the last 50 years of the automotive industry. I mean, they could own the combined market share of Ford, Chrysler, GM, Toyota combined, which is unheard of. I mean, we have so many competitors in the traditional car industry today. Can you imagine a situation where one company owned the entire market? That's what we're almost seeing now with Tesla. There is no real Samsung competitor even here, like there was in the smartphone market. There was Android, there was Google, there was Android, and there was Apple. You had 2 players. I mean, Android did with the system, but thank God they did because it created another player. Here, you may have no other player. So $1 trillion industry can be one guy. That's scary and exciting. It's both. It's amazing. And that is the bull case. That is why Tesla is valued the way it is. That's why people can say it's expensive, and they might be right, but it misses the point. And we haven't even talked about all of his other ventures and what Solar City could do for them over time if they fix that, or even potentially SpaceX if you merge that in. So there's so many, like what's amazing is Elon has created just 2 incredible businesses with SpaceX and with Tesla. God knows where he could take it from here. So it's a tremendous story. It's a story. It's more indicative too of what we see in this world. We have monopolies. Like we have businesses that just kind of control us. Same with Facebook, with Google. Google controls search. Facebook controls social right now. And there's a chance that Apple controls smartphones alongside Android, but really Apple's the main guy in smartphones, especially on the high end. And what if Elon controls cars with Tesla? Food for thought. Thank you for listening. Have a great weekend. It's Football Sunday, and I will talk to you soon. Take care.